what has happened with Celsius stock? You've probably seen the performance of the stock more recently, right? Especially year to date. And in the last 3 months, the stock has not done what you think it should, right? Year to date, stock is down, 41%. In the last 3 months, the stock is down 47%. So huge underperformance, and even that's basically an understatement. But what's the reason? What exactly is going on here? It has a market cap of $7.45 billion and a forward PE of 31.1 times, which is definitely not the cheapest one out there, but also not the most expensive one. If you look at the expected growth rates, sales is not expected to grow by much this year, or by much compared to what we're used to, close to 12% year-over-year growth, EPS closer to 26% year-over-year growth. But then we expect, or the analyst is expecting, some reacceleration in 25 and 2026. If we look at the current average analyst price target, still sits 67% higher than the price we're at today at $53.5. And it's not like the price has not moved. No, they have downgraded the stock in the last couple of weeks and months. And so right now, if we look at forward PE, EV to EBITDA, price to sales, price to free cash flow, it's all lower than its 5-year mean by quite a margin. Now, of course, previously the company was maybe not profitable, not as profitable as today. Company was also growing faster before than it is today. So it makes sense, right? It makes sense that it is lower than its 5-year mean. Even if we go to the 1-year mean, we are still lower. Now, this is a company that is still growing. That's the thing. The company is still growing. The company is still expanding as well internationally. So it's not like this is not a growth story anymore. It might not be a hyper growth story anymore, because growing, it still does. Growth rates are coming down, and that's the major issue here. So let's discuss all of that in this video. Yes, I still have a small position in Celsius, so full disclaimer on that. If you enjoy this type of videos, hit all the buttons, like, subscribe, hit the notification bell. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. I first want to start off with some data. Yes, of course, it might be backwards looking data, but it's still useful data. So on the left here is a screenshot I took from back in July, where on Amazon, if you looked at the best sellers in energy drinks, the number 1 and number 2 were Celsius. If you fast forward to today, the number 1 here is still Celsius. Number 2 is now Monster Zero Ultra. Number 3 is also Celsius. If you remember, Celsius sales to Amazon increased 41% year over year to approximately $39.9 million last quarter. If we look at another category, which is bestseller in grocery and gourmet food, number 1 there is also Celsius. So they are doing quite well, especially on Amazon. Now, to repeat what I said at the start of this video, that it is a growing company, a company that is growing revenue, whether it's North America or in Europe, revenue are going up. Now, of course, it might not be going up as fast as before, but I do still think that we are in the growth phase. Yes, it's true that more recently with the agreement with Pepsi, the percent of total revenue for Pepsi has increased quite a lot. And so, yes, if Pepsi orders less, it will impact Celsius quite a bit, which is of course one of the main reasons why the stock is down more recently. And so if we look at the data provided to us in August by Nielsen, if we look at the period tracked by Nielsen that ended on August 10th, we know that energy drink sales fell 1.1% year over year in the United States. Once again, Celsius Holdings showed the strongest growth rate at plus 8.8% year over year, although that mark was a deceleration from the 12.3% sales growth for the 4 weeks that ended on July 27. Now, fast forward, if we go and look at the Nielsen update, for the 4-week period that ended August 24, Bang saw sales up 13.4% year over year compared to Celsius, which was only up 5.9%. Red Bull was up just 2.5%, and Monster Beverages was actually down 2.5%, and that's not including Bang because they own that brand. And this again shows that despite all the headlines, Celsius is still growing. Yes, it is growing slower than previously, but it's still outgrowing, well, it's still doing better than the number 1 and number 2 in the category, which are Red Bull and Monster. So you could say that the energy drink category overall is not doing great. And despite that, I think Celsius are still putting in quite some good numbers. Now, last quarter, we did get some more color on what will happen in Q3 and Q4, especially with regards to marketing stuff, promotional stuff, etc., etc. So there were some delays in some of the resets, which also delayed some of our promotional activity, but we've got a really good promotional incentive calendar in Q3 and Q4 in the back half of Q3 and throughout Q4, because we want to make sure that we're getting the best return on investments on these activities. We also touched on the Nielsen data. It says here, you just got to be cautious about the data. There's a lot of noise in the weekly data, in the weekly read especially. You need to pay attention to what promotions were in the prior period, in the prior year. There's just a lot of noise there. It's 100% correct. And I also don't think you are getting the data. Well, the Nielsen data doesn't tell you the real story from Costco or from Amazon or stuff like that. But of course, whatever is in the headline is going to hurt the stock in the short term. Now, more recently, during a conference with, I believe, Barclays, but I'm not 100% sure. Anyways, there was more information about Pepsi and the hit that they are taking. So they're saying here, what we're seeing year to date, roughly around $100 to $120 million of orders being reduced from what they ordered last quarter. So we're still seeing this inventories level being reduced. It has increased in the third quarter. That's something we can't control. But what we can control is, as if we're continuing to build, we got further innovation, further expanding customer base, activating the customer. We have a lot of great programs in the back half of this year and marketing initiatives that we can control. But controlling that inventory component within Pepsi and what they're ordering, because keep in mind, we recognize revenue when it delivers to Pepsi. We're not recognizing revenue when it's selling through the scan data. So we just have a really disconnect. It's true. That's the beauty and the disaster of these types of deals, right? Because the moment that they sell to Pepsi, no matter what happens after that, that's when you recognize revenue, which, okay, is great when Pepsi puts in a huge order, but it's not that great in this scenario today. They also said something else. Just to be clear, I think when we look at Q3 of last year versus Q3 of this year, we're up 10% quarter to date year over year. So that's already a positive. And if we're being honest, if you look at the numbers on the screen right now, if not, I'm just going to read them out. Revenue last quarter was up 23% year over year. In North America, also up 23%. Internationally is growing 30% year over year. Gross margin was up 320 basis points to 52%. Net income up 55% year over year. Net income attributable to common shareholders up 63% year over year. Diluted earnings per share up 65% to 28 cents. And adjusted EBITDA increased 29% year over year to $100.4 million. This is not a company that is struggling. This is just a company that is growing a little bit slower than before and has to deal with, issues that are happening at Pepsi, which in my opinion are just short-term issues because this company is still growing in North America and is still expected to grow quite a lot internationally. It's still launching in new countries each and every quarter, each and every year. So expect those gains to be added to international in the upcoming quarters and years to come. Of course, that's not to say that they're going to be successful in every country that they're launching, right? Not everybody is a fan of Celsius. Not everybody is a fan of energy drinks. Red Bull, Monster, doesn't matter. Just so we're clear, just because they're launching in your countries doesn't mean that it's going to be a big positive, a big addition to revenue. In some countries, they might fail, and in some others, they might be extremely successful. They got some good partnerships going on as well in Europe, with Ferrari, for example, with Charles Leclerc. So I expect that to be a nice little contribution as well. So yeah, overall, I think it's short-term noise. Of course, I would love to see some positive reacceleration in growth, and also some positive commentary coming from Pepsi, 100%. But all in all, I think the people that are talking about Celsius right now as if this is a dying company are not really looking at the business, are not really looking at what's been happening with Celsius in the last couple of quarters, listening to what management has been saying, looking at the data, because if you look at all of that, you cannot come to the conclusion that this is a dying business and it's game over. No, it's a growing business, but growth rates are decelerating and the market wants to see a bottoming of the, well, or let's say a light at the end of the tunnel with the inventory issues that Pepsi created for themselves, right? Because they over-ordered and now they have to overcorrect. That's all in my opinion. I'm still quite bullish on Celsius, and I for one actually like the drinks. I think the mango passion, just personal stuff, so it doesn't really matter, but mango passion is my favorite. It's quite a good drink. But okay, never mind. If we look at the stock right now, I mean, you can see here a clear double top at around $93, $95 or so. On the weekly, RSI is, well, close. I think it's just oversold right now. If we're looking at where we're at right now, we are a bit in no man's land, to be honest. I would like to see the stock find a bottom at around these areas right here, at around $30 or so. These are the areas where previously here, March 2023, we did find some support. It was also one of those weeks where we went under the 200-day moving average, but then we rebounded above it. So let's try and do the same right here, find a support at around $30, $32 or so. Of course, to initiate a new position, you would like to see the stock bottom out before, well, catching falling knives. So to conclude, yes, I'm still bullish on Celsius. No, I will not increase my position by a lot. I will add some extra shares to reduce my cost price because yes, I did jump in a little bit too early, but luckily for me, it's still a very, very small position. So I can add more shares and put that average down. And then when I'll see some positive signs, and I don't really mind if the stock has gone up, if I see some positive signs, I will add another chunk. So that's basically the strategy for me right now. It's just my opinion, of course. Do share your down in the comment section below. Like, subscribe, do all of that, and I see you all in the next one. Bye-bye.